one stock that is about to jump up in price. It is a electric vehicle stock. They just had earnings and they have a collaboration with Nvidia to do simulations. So this is a huge company. The earnings reaction was excellent. There's a great spot to get into the stock, risking very little, which is the name of the game in terms of mid to long-term investing. So let's get into it. It's not Tesla, it is GM, General Motors. And at the end of this video, I'll tell you about the make $100,000 in stocks in 90 days, or you get your money back guarantee. This is not financial advice. Let's get started. Here we go.
This is Sam Putnam.
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 So here is the Nvidia collaboration. They're extending their collaboration to incorporate AI and simulation technologies in the next generation vehicles manufacturing process. Nvidia is the biggest company in the market. This is a major boost for GM. That's not really why GM is most important right now, though. What's most important is some of these earnings results, right? Tesla just came out as of the time of this recording this video an hour, 2 hours ago. And to make it super simple, they didn't beat earnings per share. They did have higher revenue, okay? So you see those numbers there. They didn't miss by much, but they did miss. Now, Netflix wasn't a good sign for Q3 earnings either. Q2 earnings weren't great in general. Most stocks didn't do great with Q2 earnings besides like Reddit. So Netflix missed and then beat on revenue. There's GM, beat and beat, and Intuitive Surgical also beat and beat. However, when we look at the charts, Intuitive Surgical is down a little bit today. Now that's not surprising. The market is down today, but what's so impressive about GM? It's holding, okay? So this is just a picture perfect setup where you can get in, you can risk this high volume close. There's a lot of volume. It closed up here and you risk $1 to make $5, $10 or more. So awesome setup. This is a super important level that it's getting over from December of 2021. And if we really zoom out on a 20-year chart, you can see how big this moment is for General Motors going over this $67 level. Looks wonderful on a quarterly, on a monthly. It's still pretty interesting. And on a weekly, there's another peak that we start to see more clearly there. So that's GM. That's the technical reason. Talked about the earnings, and let's get into a little more about GM itself, aside from it beating on earnings per share, beating on revenue, and aside from that, Nvidia collaboration. So here's the deal. They also have some partnerships with big companies aside from Nvidia. That's not really that surprising given it's General Motors, but it is important to see that they are working on electric vehicle availability, fast charging, and we'll see what they do with Nvidia in the future, but they are using the accelerated computing from Nvidia for their manufacturing, not so much for their self-driving. That could change. Most importantly, though, this is the earnings right now. This is super solid. They raised their full year forecast. And then as far as tariffs, they did face significant costs, but seem to be doing all right. And they just found that people didn't want their electric vehicles. The federal tax credits didn't help either, but you know what? The net income dropping doesn't seem to be impacting the stock. So Someone is buying this stock even though there's a 50% plus decline from a year ago, Q3. So this revenue must be doing it. This earnings per share must be doing it. You, me, we don't really have to care exactly why GM is doing so well. Someone is buying this stock. This revenue is as high as it was a full year ago. And like I said, super relative strength today. This is probably what, from 66 to 67. This is like less than 1% in a single day. And yesterday it was a 15% day. So this is a dream scenario if you're a math head, if you like super low risk opportunities. Now, it's not a big deal they're getting out of China. That's probably actually a good thing. A lot of companies are not, US companies are not loving working with China. This recall, this is a lot of cars, but it's not a crazy amount. So all we can really say is they're a dividend producing stock. They're increasing their dividend. They're buying back $6 billion worth of shares, and revenue increased in the last, 3 years. Let's see, that's about 100 plus billion. And then now they're, way down from that. But if we look at the chart back in 2022, 2023, 2021 was crazy. They got wrecked just like every other company in 2022, 2023. And I couldn't tell you why the revenue being so much lower led to such an increase in the share price. But what I can tell you is maybe they have enough restructuring, enough cuts, enough maybe layoffs, whatever it is, that investors clearly love the company. I don't know that they love it as much as, the Mag 7 companies at all. But as far as a pretty large incumbent company, this is a huge percent increase, 100% since October of 23. So 2 years, 100% gain. If we look at Ford, obviously this is not even close to that. This is barely up at all, depending on where you measure it. And sure, I mean, it's not fair to compare it to Tesla, really, from October 23 to Tesla. It's up more than Tesla over that period. So the reason it's not really fair to compare it to Tesla is not really valued on its current revenue, which is what it is, but it's just not, right? This entire move was basically the election euphoria, and then the reversing of that election euphoria after, this was absolutely unprecedented increase that was unsustainable, but also the Trump Elon falling out, and then this breakout was absolutely beautiful, and then the sell-off on delivery numbers, and now the earnings miss on the earnings per share, the beat on revenue. We'll see what happens here, but on a weekly, Tesla still looks good. However, on a daily, which is what I think is more interesting, if you're looking for a good entry, I think GM has to be the play. As far as actual liquidity, yeah, it's not even close. I mean, this is 30 million on a $50 stock. It's not even in the same ballpark as Tesla, which trades 60 million on a $400 stock. But you know what? Almost no one who's going to come across this recording or live is in the camp where they need that much more liquidity. So GM definitely looks like the play. I've talked about some of the comparisons with other earnings, which is important to look at other earnings in a particular quarter, because, for example, in Q2, there were some drops that basically reverberated around the market. Netflix, of course, being the worst one right now, but even in Q2, Netflix didn't do great. And that's sort of like the canary in the coal mine. Spotify, the other canary for consumer. And of course, the market did have a great September, but after those earnings, it was a little rocky. It pretty much went sideways for a month. So this is the play. This is the idea, GM. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe on YouTube. And I invite you, if you want to make $1,000 in stocks in the next 90 days, I can't guarantee financial performance. The disclaimer is down below, but you do get your money back, provided you have $25,000 to invest at stockscommunity.com. That is the Stocks Community Guarantee. Make $1,000 in 90 days or your money back. Small $25 non-refundable fee to get the bots out, and you can try that out for 7 days. I'll see you over there. See you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.